my personal account was swing trading strategy. I open the trades usually on Sunday or Monday, market opening, and the trade is based for the week. So I want to close it maybe on Wednesday or Friday.
I see.
And because it's a more safe aspect to it. With prop firms, it's pretty different because all the rule sets, drawdown limits, maybe resets on daily. So it's difficult to execute real swing trading strategies with them. That's why I scrapped my book and did a complete different strategy, more intraday, not scalping, but pure
And
intraday.
that prop firm adjusted methodology was more technical, so it was still around fundamentals primarily?
Still around fundamentals, but I have a very simple technical strategy behind it to execute. Like if my fundamental bias tells me I want to go short US dollar this week, I search for this on my technique.
Okay, I want to ask a few questions for the first year or two where you were finding your profitability, but you were still immature or amateur in your career compared to now. You developed a lot since then. I want to understand the difference between year one and now how many years are you in now? 15 years in. So the main questions that helped me understand where you were at was, what was your risk management like on average? How often were you taking trades? What was your average win rate? What was your average risk to reward back then and now in year 15? And how has that developed?
So in the beginning, win rate was quite high, like 80%.
Oh wow!
But
how
the
often
losses
were you executing?
more or less the same, like 1, 2, 3 trades a day, because it was always these intraday things.
Across how many pairs, currency pairs or asset classes?
3, 4 in the beginning. Like I like the GBP pairs.
Super active. Okay.
Yes, but in the beginning, like 80% win rate. Is not completely right because the losses were quite high. So in general, it wasn't really profitable because I let losses run and cut down the winnings.
So the issue was not the win rate; the issue was the risk reward you were using. Is that because of lack of risk management, or?
Yeah, because I was just starting. I didn't know. Yeah.
And now fast forward 15 years, what does that same data sets look like?
Well, the risk reward is around 1 to 2, 1 to 3, sometimes 1 to 5, because I execute just 1, 2 trades a day, and they have to matter the most.
And the win rate is still similar, or it's come down?
It's around 60 to 65% with prop firms.
Okay, so with a 60% win rate and up to 1 to 5 risk reward, that is a very good distribution. Average trade duration is just like Monday to Wednesday. Like that. I try to close it the same day, but sometimes it runs for 2 or 3 days. Depends on market. So that's very interesting to me because you're making a fundamental bias which can be priced in or can manifest, or that news can simmer for days or weeks at a time, but you're kind of looking at a session play. So why have you still decided to have fundamentals as your primary source of decision making as opposed to just going pure technicals? For example, it's very different for me to hear this angle because I'm 99.9% technicals and I'll barely look at the news. If anything, it's a catalyst for I'll very quickly hit my stop loss or very quickly go into profit, and then I'll say, oh, it was a news event. But I'm very, very technically based. I'm sure you have competence in your technicals, but you've still decided to stay with a fundamental premise. Why have you taken that decision?
In my opinion, and over the years, I learned that fundamentals move the market. As you said, like if you trade pure technical, sometimes anything can happen and it goes through a stop loss. So if the market is purely based on technical, we would just go sideways the whole time because it just goes to resistance and support, and that's it. The market movers are the fundamentals. These are the events, not only in minutes of the event, but they define the market structure for a year or for a month or for a week. Depends on how big the move is in the fundamentals. So these events are just too big to left out, in my opinion. And
I completely agree on that because if it wasn't for fundamentals, price would just be stagnant. So what is actually causing the supply and demand movement or investor confidence and not? I agree on that. But what about the notion of we are probably the last to find out the information. And as you said, certain things get priced in before the public will find out. And I believe the market price action can show you that decision or what is being priced in or what people are thinking. Through price action, you can start to see that footprint And then when the fundamental release happens and the news release happens, you kind of see the resultant of that as a cause and effect, but the cause was already priced in or starting to see the signs, which is why, for example, it's not a place of naivety where I refuse to look at fundamentals because of an ego. It's more that I find sufficient from my price action read that I can start to see, okay, this likely is going to be bearish today. And then the news release kind of comes alongside that. Do you not see the telltale signs of what you're reading in the fundamentals in technical analysis itself in price action on a lower time frame?
Yeah, definitely. So and if I'm talking technical, I'm almost always use price action patterns. And but I think what fundamentals is to me is it gives me the certain bias that what I want to search in the week. It's not just news events. It's just how I think the market is currently structured. Do the big players want to sell US dollar because of interest rate differentials, for example, from Japan to US dollar to US right now? So this gives me like the edge in my technical approach. So I don't get caught in bad trades. I would say it like that.